Hi, my name is Tiffany Gonzalez. I'm a certified public accountant and one of OnPay's expert contributors. And today we're covering a topic most small businesses should be familiar with if they have at least one employee on their payroll. It's Form 940. Now, I know tax forms aren't exactly thrilling, but stick with me because this one's important. And the good news, it's actually not as complicated as it looks once you understand what it's for. Let's start with the basics. Form 940 is your annual federal unemployment tax return. Think of it as your yearly report card showing what you contributed to the federal unemployment system. Here's how it works. The Federal Unemployment Tax Act, commonly known as FUTA, requires most employers to pay taxes that fund unemployment benefits for workers who lose their jobs. And Form 940, this is how you report those taxes to the IRS. Now, you may be wondering, do I really need to file one? Most likely, yes. Yes, if you meet either of these thresholds. Number one, you paid wages of $15 or more to employees in any quarter of the year. Or number two, you had at least one employee for 20 or more different weeks during the year. Notice I said or, not and. You only need to meet one of these conditions. Before we move on, I need to point out that the rules are slightly different if you run a farm. You'll need to file if you paid $20,000 or more in cash wages to farm workers in any quarter, or if you employed 10 or more farm workers for at least 20 different weeks. Now, who's off the hook? Nonprofit organizations with 501c3 status don't have to file, and neither do government entities. Also exempt, railroad companies and certain household employers who hire nannies or cleaners. Here's something important. Form 940 is filed annually, but your tax payments are quarterly. The form itself is due January 31st every year for the prior, so you're reporting on the previous calendar year. But here's the catch. If you owe more than $500 in FUTA taxes during the year, you'll need to make quarterly deposits using the Electronic Federal Tax Payment System, also known as EFTPS. Those deposits are due by the end of April, July, October, and January. Think of it this way. You pay as you go throughout the year, and Form 940 is that final reconciliation to make sure everything matches up. Also, keep in mind that payroll software companies like OnPay withhold all payroll taxes, federal, state, local. Each pay to run your tax payments, plus they file Form 941 quarterly, as well as Form 940 at the end of each year. So one less thing on your plate. Understanding FUTA tax rates and credit reduction states. Let's talk numbers for a second. The FUTA tax rate is 6%, but most employers get a credit of 5.4%, which brings your effective rate down to just 0.6%. And this only applies to the first $7,000 you pay each employee per year. So if you have an employee who makes $50,000, you're only paying FUTA tax on the first $7,000 that they make. Here's something to watch out for though. Credit reduction states. This happens when a state has borrowed money from the federal government to pay unemployment benefits and it hasn't paid it back on time. The takeaway is that if you're doing business in one of these states and this affects you, definitely talk to your accountant because there are additional calculations you'll need to do on Schedule A of Form 940. Also, we'll leave the links in the description below for more information. What you need to complete for Form 940. Before you start filling out the form, get these items together. First, you'll need to know whether you're required to pay state unemployment tax. Most employers are. You'll also need your total tax payments to all employees for the year. This includes wages, fringe benefits, tips, retirement contributions, basically any compensation you paid out. Next, identify any payments that may be exempt from FUTA tax. This can be things like certain insurance contributions, group term life insurance, dependent care benefits, and finally, calculate your total wages paid that exceed $7,000 per employee. Because remember, as we talked about earlier, FUTA only applies to that first $7,000. If you use a payroll software like OnPay, which I highly recommend, A lot of this information should already be organized for you, which makes your life a whole lot easier. Let's walk through that actual form. It's broken down into 7 parts, but don't worry, we're going to take it step by step. Part 1 is where you indicate which states you paid unemployment tax in. If it's just one state, you enter the abbreviation. If it's multiple states, you'll check a box and then complete Schedule A. And if you're in a credit reduction state, you'll check that box too. Part 2, this is where you calculate your FUTA tax before adjustments. You'll enter your total employee payments, subtract any exempt payments, subtract wages over $7,000 per employee, and then you'll calculate your tax by multiplying your taxable wages by 0.006. Part 3 handles adjustments. If you're not getting the full credit, this is where the credit reduction states come into play. Part 4 is your final calculation. You'll add up your total tax, you'll subtract what you've already deposited throughout the year, and then you'll see if you owe anything or if you overpaid. Part 5 is only needed if your total tax is over $500. Here, you'll then report your tax liability per quarter. Part 6 lets you designate someone else, like your accountant or payroll company, to talk to the IRS about this return if needed. And Part 7, this is where you'll sign and date. Once you're done, you can file this electronically through an authorized provider, which is honestly the easiest way. Or if you prefer paper, you can mail it to the IRS. Just make sure you use the correct address for your state, which you'll find in the form instructions. Form 940 keeps your business on good footing, and there you have it. That's Form 940 in a nutshell. Remember, while the form is annual, those quarterly payments are critical. Missing them can result in penalties, and nobody wants that. If you're using a payroll service provider, they'll typically handle this for you automatically, all behind the scenes. But it's still smart to understand what's happening. You're the business owner, so this is ultimately your responsibility. And if you have any questions or you're dealing with something complex like a credit reduction state, don't hesitate to reach out to a tax professional. We're all here to help to make this stuff a little bit easier for you. Also, we've included some links below with more information. And if you're interested, you can try OnPay free for 30 days to see what they have to offer. A link is included below. Thanks for watching, and we'll see you next time.